Welcome back for the final presentations of Diggers and Dealers for 2021. For those who weren't in the last session, my name is Courtney Libby and I'm a Corporate Finance Analyst at Canaccord Genuity. Let's get straight into it with the first presentation from Stuart Matthews, Executive Vice President, Australasia of Goldfields Australia. Stuart is an international mining professional with over 30 years' experience, having worked in Australia in multiple states, Mexico and New Zealand. Stuart has a Masters of Science Geology from the University of Canterbury in New Zealand. In the last 20 years, he has worked in project development, general operations management and at the COO level. Stuart joined Goldfields in mid-2013, initially at St Ives. In his current position, Stuart manages the regional portfolio of mines in Australia that deliver over 1 million ounces of gold per annum and the strategic innovative growth in Australia and Greater Goldfields globally. Welcome, Stuart.
Thank you, Courtney. Look, it's good to be at Diggers and having some face-to-face meetings. Really enjoyed the last couple of days. I'm just going to give you a little snapshot about Goldfields in Australia, a little bit globally, but mostly concentrating on what we do here. That's most important and most relevant. So this presentation is called A Renewable Commitment to the Future, and I'll take you through that now. So Goldfields globally as an investment case, I think we offer pretty good value. We are a pure gold play. We don't look for anything else really. We want to keep that message pretty simple. We have geographic diversification across the globe. We're in countries and jurisdictions which are pretty safe, and we continue to invest heavily in those jurisdictions. We have high quality and low cost operations, and I'll mention the cost profile of Australia as we go on. And we have a very deliberate strategy, especially in South Africa. We're moving away from those old legacy mines where a lot of people were getting hurt, a lot of handheld operations. We've really mechanised our operation in South Africa, and we can continue to modernise it, and it is getting great production, and it's improving all the time because it has had a bit of a difficult track record in the past, but we're heading in the right direction now. And we're very mechanised and we're modernising our business in Australia and globally. We've just come out of a reinvestment program a couple of years ago. It started in 2017 through to the end of 2019 across the globe. For that period, we invested heavily in all of our operations to reset for good cash flow, and that's where we stand today, and we're getting rewarded for that investment quite handsomely. And also we got rewarded on the timing because of the escalation in the gold price, which was fantastic. So in the near term, we're also developing a new project at Salares Norte. That's in Chile, in the Atacama Desert. It's quite challenging. It's 5 kilometres up in the Andes. It's quite a spectacular location. We're in full construction there now. That will come online early 2023. It's going very well, and that will really lift our portfolio and give us a nice bit of growth for Goldfields as well. So where we are, globally we're very diverse. As I said, we have a big presence, so we've got 9 mines, 1 project in 5 countries. Our production last year at the end of 2020 was 2.236 million ounces, so pretty good, almost 2.4 million ounces. Our overall all-in cost across the company was $1,079 an ounce US. When we talk about all-in cost in Goldfields, that's everything. We do report all-in sustaining costs now, but we are very transparent on our all-in costs, and that's everything. That includes our growth capital, also our expenditure on exploration. All our corporate overheads are included in each of the regions as well, and they're all cost numbers. So what you see is exactly what it's costing us, the real bottom line. So our presence in West Africa, That's in Ghana. We've got big mine there in Tarkwa, Damang and Asanko. There's a 50-50 joint venture, the Asanko one. They've done very well. That's the second biggest producing region. The Americas, very low cost operation at Cerro Corona, and now we're building Salares Norte as well in Chile, so that adds to that portfolio. And in South Africa, our South Deep mine is lifting their production profile and making money, and doing pretty well this year, even in the face of the tragedy of the pandemic, which is quite impactful there. And the Australian region, we are absolutely relevant for Goldfields globally because we produce over 1 million ounces. In 2021, it was 1,017,000 ounces. That was above plan at an all-in cost of $957 an ounce US. That was 1,370 Australian, includes everything, as I said, and we produced net cash flow in 2020 of US $498 million of cash after tax and everything, so that's a fantastic year. That represents 723 million Australian dollars from our 4 mines in this region. So, nice cash flow. Gross cash flow was over $1 billion. So this is where we are in Australia, a 1 million ounce gold province now, and we have line of sight at 1 million ounces for well over 10 years now in front of us, so a great place to be. Some people say that these old mines, especially Agnew and St Ives, which we acquired in 2001, were a bit tired, must be coming to the end. Well, I can tell you they're not, and they have well in excess of 10 years in front of them, especially from a strategic point of view, and we invest heavily and we get very well rewarded for it. And Granny Smith was a great acquisition we made in 2013, and that continues to deliver at around 270,000 ounces per annum. And the Gruyere joint venture with Gold Road, we're the operator, and they did a great job discovering that mine, Gold Road, and that mine is getting better and better. We're on a strategic path to get that to 10 million tonnes of throughput through the plant in the next couple of years and producing well over 300,000 ounces a year. Of these 4 operations, 3 are fly in, fly out, except St Ives, where we do have a fly in, fly out component, but predominantly about 85% of our people are actually residential in either Kambalda or Kalgoorlie. So just so you get a bit of context for Australia, you can see that our production was sitting at about 44% of the gold production of Goldfields comes from Western Australia, so absolutely relevant for our company, and that will grow over coming years. On a net cash flow basis, we produce very close to 60% of the net cash of the company, so I'm sure they won't give that up very easily. And also our reserves are sitting at 7.5 million ounces, and with our investment over the last few years, or the last 7 years in particular, of around $85 to $100 million per annum, we've really grown that reserve base in Australia and will continue to do so. There is no intent to stop that level of investment in the region across our 4 mines because we're getting rewarded at around $65 per reserve ounce, which I can't buy reserves for that cheap. So we'll continue that growth. And last year in Australia, we had a great increase in our reserves of around 8% across the region. The biggest increase is coming at St Ives, where the Invincible project, Invincible mine in particular, continues to grow. We still do not know what the scale and size of that thing will be. It has been a great discovery. And at Agnew, we had a 19% increase, and we're on a pathway of getting to around 6 years of pure reserve there. If we're investing at the right level, that mine has got a great future as well, and we're doing some upgrades there, especially around the processing plant. We have invested very heavily there in renewables and for the future, as well as a camp, a very modern camp facility for our people as well. On cash, this just shows the group, the graphs show the group cash, capital expenditure and also the net cash flow. On the top graph, you can see in 2017 and 18, we did spend quite a lot on non-sustaining CapEx, so growth CapEx, and that was that investment in Damang in particular in West Africa as a massive cutback, and also some investment in Gruyere while we built that mine, and also there was some other growth investment across the asset at South Deep as well. And in 2019, we started our investment in Solaris for South America. During that period there, you can see on the cash flow graph there for the company-wide across the group, 17, 18, quite low cash flow years, negative in 2018 while we did that big period of reinvestment, and now coming into 19 and 20, getting ably rewarded with a lot of cash. So just a reminder that in the Australian portfolio, net cash of 723 million after taxes and everything in our region. That's phenomenal from 4 gold mines. That's quite unique. The stellar performer there was St Ives. They produced something over $350 million Australian of that contribution. Agnew did very well, around 183 million, and about 170 odd million from Granny Smith. So little old Agnew pipped to Granny Smith last year on cash. So great performance from them. Just a reminder, we are producing that 60% of group net cash flow. And one thing about our company right now, we're not hedged at all. So we're realising the full gold price, currently just over 2,400 an ounce. But we do have some protection in place. We put some put options in place at a strike price of 2,190 an ounce. But that's a bit of insurance while we're investing for the development of Solaris in South America. But we get the upside. And we're getting that now about $200 an ounce above that, so that's fantastic. We don't usually hedge much in our company. It's only very short term if we do it. So you are exposed to gold price with us, but we're happy with that. We've increased our capital expenditure in 21, and that's driven by a major project at Wallaby at Granny Smith. We need a second decline. As we're getting deeper, we need to maintain our productivity and our ounce profile, so we've committed to longer term vision there. And it's also a big investment in plant modifications and increased development at Agnew while we open up more ore bodies there. Just a track record of where we've been in Australia. The last 7 years we've actually exceeded guidance on production as well as the all-in cost. And the last 5 years are presented on these graphs. You can see the green bars is what we actually did. The only one we missed out on slightly on production was 2017, and we're only about 3,000 ounces down. The rest of the time we've been up and exceeded guidance, and on cost we have always been under, except for last year where with the pandemic, we over-resourced a little bit in people and procurement so that we could protect our assets in case something went wrong, and we bore about an extra $20 an ounce during the course of last year. But we're well positioned to continue that 1 million ounce profile, and we are the second largest producer in Western Australia. We were number one for a short period of time, and then Northern Star and Saracen got together and knocked us off the perch. But we're not worried about being the biggest. We're worried about quality of the portfolio. But it was nice for a little while, I must admit. Just a little story, a couple of slides about our energy journey, and I think we're I believe this is something that Goldfields in Australia should absolutely be proud of. The slide you see here now, we've invested with some development partners across our business on 3 of our mines so far, and more to come. At Granny Smith, we've partnered with Aggreko, where they've built a 8 megawatt solar facility for us. We're getting deeper. We needed to bolt on some extra power, so why not do something in the renewable space? And that includes, it's underpinned by gas, but we've also got a backup of some diesel if required, but we don't usually need it. And we have battery facility as well. That's about a $17 million investment, and that represents 9% renewable energy in our business at that asset and 7% net emissions reductions. I'll talk about Gruyere first before going to Agnew, because I'm going in that one in a bit more detail. But Gruyere, we've sort of protected ourselves against some power supply there, and also we're pushing up a little bit on our production in that plant. So we took the opportunity to invest in 12 megawatts of solar. That is in construction right now, and it's a 4.4 megawatt battery electric storage system there as well. It is underpinned by gas as well. That renewables project is $23 million, and it represents 10% of the energy of the company, of renewables, at Gruyere, and that will reduce our emissions there by 7%. If that mine goes and we have to go further, it'll be a renewable solution on power. Now Agnew, this was the first cab off the rank. Last year we partnered with EDL, and EDL have helped us build a 16 megawatt wind farm and a 4 megawatt solar. The wind is the one that really moves the dial here, and a 13 megawatt battery storage facility which has the capacity to pump out 4 megawatts per hour, and it's underpinned by gas as well. That project is $70 million. At the same time, we also invested in a brand new camp for Agnew, which is very modern, a great facility. That was for the health and well-being of our people. And that project was very seamlessly commissioned with EDL, and we had great support from the federal government, who popped in $13.5 million in assisting this project. And the state of Western Australia, the government has been very, very supportive on this, and I thank them for their great support on this project. This represents 54% of our energy production at Agnew is by renewables, and that has operated at almost 100%, but for a very short time when things were when like climate and wind and temperature was absolutely optimal. But that represents 42% emissions reduction on that mine. We're working now, we believe we can get this to 95% consistently in the next couple of years. So a great step forward for our company, and we've won awards for this internationally, recognised in London for engineering excellence. And just having the guts and the courage to let's just do it. And this has been fantastic for this mine. When you go to this mine today, it is a modern mine. It's been around for 40 years. So this is what it looks like. We've got the 21 megawatt thermal power station there, 4 megawatt solar farm, that's about 10,700 panels, and we've got the 13 megawatt battery storage facility just there. Out in the distance, the 18 megawatt wind farm. Now a little bit of a coincidence, it's a pretty picturesque site there, and it was by chance. I can't take any credit for it, but it looks fantastic, especially in the early morning. And we have a microgrid control system as well. And again, thank you to these great partners. I mean, EDL could not have been a better partner in building this for us. And ARENA, federal level funding for renewable energy solutions, that was great support we had there. And this is how it all works. It all comes together, and we feed 15 megawatts of power down the line to our underground operation and our processing plant. But the intangibles that this delivered for this mine, it used to be viewed as, it's only got short life. It's had 3 years of reserves for 40 years. It's now, this investment is a commitment for the long term. We're in control of our own destiny. We can bolt on and add to this. It's a now modern mining operation. I used to refer to it as an amateur oil painting. It now looks like a Rembrandt. And it's a demonstrated commitment to our company reducing emissions. We believe in climate change and the impact it will have. It's real. Our people who work for us believe it's real, and they would like it to work for a company that commits to this sort of thing. And our people are really proud of it, and there's absolutely renewed motivation and morale of all our employees and contractors there. People want to work at Agnew. And we've got that international recognition, and we've got credibility because around our vision on our values and our sustainability and our ESG priorities as a company. And we're taking this further forward. We are doing work around an energy solution for the long term at St Ives. That's work in progress. But for the future, we believe we need to be electrified. We're weaning ourselves off diesel. Diesel now represents less than 5% of our business in Goldfields. Gas is that key transition fuel, and I think most governments recognise that. And we've got the opportunity to be quite diversified around wind, gas and solar. We want to be modular and connected. We're building things that we can bolt onto quite easily and readily, and with new technology and more storage. I mean, even in the 12 to 18 months since we've commissioned Agnew, the technology's already moved. So this will be a disruptor in gold and in mining, and we're at the forefront, I believe, and very proud to be so. And that's what it looks like at Agnew, and we're continuing this energy journey for the long term and continuing long-term production of over 1 million ounces in the region. Thank you.
Thank you very much, Stuart. We have some time for questions, so if there are any questions from the floor, we'll take those. Otherwise, we'll go to the ones that have come through online. No? All right, we'll go to the ones from online. So is there still opportunity for significant mine life extension at St Ives and Agnew?
Yeah, so they're the oldest assets in the Australian portfolio, acquired in 2001. We're investing $37 million per annum of exploration into St Ives and $24 million per annum at Agnew. And we've been rewarded for that. We're not just replacing depletion every year, we're now providing a lot of growth as well, so it's rewarding.
Yeah, and the final question is one that you get all the time, so I'm sure you're used to answering. Would Goldfields consider a listing on the ASX? Yeah, that's always one that comes up every year. And we are internationally, we are listed on the New York Stock Exchange, and about 75% of our investor base is North America and a bit of Europe and the UK. So we're probably staying there, and we also have a listing in New York Stock Exchange, Johannesburg Stock Exchange. At the moment, I'd say no, but you know, we would probably have some real value in listing here, but at the moment, there's no intention to list in Australia. Great, thank you very much.
Thanks.